Hi, I am Michael from Jamaica, and in my head, I have the stock recommendations for your financial independence, man. Today's video will be an update on the NIO share. For more than 2 months, the NIO share has been on a volatile roller coaster ride that has taken a toll on investors' nerves. But today, I will look at how we can best act in this situation and what news will have an impact on the share price in the future. That's what we're talking about today, and I'll show you how the share price has developed since our entry in September 2020. And for all those who are not yet invested, we will analyze the chart for meaningful entry opportunities. Since NIO marked an all-time high on January 11th, the share has moved in a volatile sideways phase, roughly estimated between $64 and $54. After this range was broken to the downside on February 18th, the market is now in an intact downward trend that is currently correcting. What happened? Well, I'll tell you. The major indices, including the NASDAQ, all took a breather. This led to a similar chart performance for other EV companies such as Tesla or BYD. So the correction was not just company specific, but affected the entire EV sector. Problems such as global chip shortage have led to a temporary production cut. For the time being, NIO's production capacity will be reduced from 10,000 to 7,500 cars per month. According to CEO William Lai, the shortage of chips and the resulting cuts will first affect the current quarter. However, experts assume that this problem will accompany NIO and the entire EV industry until the end of the year. If the delivery problems do indeed drag on until the end of this year, this would have fatal consequences for the NIO share for two reasons. Firstly, the forced production cut would lead to an increase in burning of cash, and this after the company was well on the way to becoming profitable in 2021. And secondly, other heavyweight competitors such as VW, Ford, and GM will enter the Chinese market this year. Products like VW's ID.4 target the premium EV segment, a market segment that has so far been dominated by NIO and Tesla in China. And to stay with the example of the ID.4 from VW, this car is not only competitive in the premium segment, but also cheaper. Although the chip shortage affects all manufacturers equally, NIO's economic situation is more fragile than that of its competitors and therefore hits the company harder. The 20% subsidy cut for the purchase of an EV announced by the government in January also came at the worst possible time. 2021 will be a challenging year for all EV manufacturers. Not only will the competition increase, but the sales will also change. Europe and the USA will have a major say in the future as far as new EV registrations are concerned. The cards are being reshuffled. And NIO, which is still not profitable, is currently on an investment-intensive leap into Europe, could be caught up on the wrong foot with the forced production cutbacks in 2021. So, is there light at the end of the tunnel? There's also some positive news about NIO, man. Positive news about NIO. A new joint venture was signed with JAC Motors, that's JAC Motors. Both intend to deepen their cooperation in the areas of manufacturing, services, and the production chain. The focus of the new joint venture called Advanced Manufacturing Technology, or ANUHI for short, will be on research and development in connection with intelligent electric vehicles. This also includes technological consulting and technology transfer in connection with the EVs. The presentation of the new ET7, which will be launched in January 2022, was another technical milestone. The ET7 is a highly autonomous electric sedan with numerous technical innovations, such as crystal-like heartbeat, tail light, all-glass roof, a digital entry system that extends the flush handle and automatically releases the door e-latch as the driver approaches. In addition, the ET7 could be the first electric car with a solid-state battery and a range of 600 miles. Another good sign is that NIO continues to be heavily traded by institutional investors. Over 700 funds owned the shares in NIO in December. That makes me optimistic for the future. There have also been numerous positive analyst comments in recent weeks. For example, analysts Edison Yu and Emmanuel Rashner made the following comment. With demand growing rapidly, driven by brand awareness and consumer sentiment shifting, we believe NIO is on track to be a market leader in China premium segment. Bank Mijos Rakesh issued a buy rating emphasizing that NIO is a market leader and innovator in the Chinese premium electric vehicle segment. Rakesh gave a target price of $60. According to Zacks, a total of 5 Wall Street analysts gave the NIO share a buy rating of 4 a hold and none a sell. So where do we go from here? In the short term, much will depend on how long the chip-related production cuts last. Overall, 2021 is not likely to be a good year for NIO. Macroeconomically, the market will remain volatile, and it is more likely that we will see prices around $30 again this year rather than $60. Our short-term forecast see the NIO share in a sideways ranges between $40 and $50. Bearish spikes to $38 range would also not be surprising. For the share price to fall below $32 again, production will have to be cut by the end of this year. In the long term, the prospects for NIO remain very good, especially in the Chinese market. Here, NIO remains one of the most innovative leaders. We are maintaining our medium target price of $75. For price targets above this, it will be crucial to see how the expansion efforts in the European market progress. Those who are not yet invested should also use the volatile bearish spikes to buy into the market piece by piece. The sale of put options can also lead to optimal entry. We again picked out a few particularly interesting options for you. You can read the exact parameters above me. For all those who are invested, keep calm and do not sell in a panic. Set your stop loss marks according to your investment horizon and stick to them. Prices will rise again, but the market needs time to do so. Now, to the performance of our investment in NIO. On September 24th, 2020, we published our first video on NIO. Anyone who bought into the market at the opening price on the following day had a theoretical profit of 372% at the all-time high in January 2021. Not a bad performance for 4 months of investment, I would say. With the closing price on Friday, March 19th, the investment profit is still 241%. Well, so much for NIO. Have fun and good luck with your investment. Listen, man, if this video has brought you any intellectual added value, please leave a comment. We're also happy to answer any criticisms or suggestions. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence, man. Yeah, man.